You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to live.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 24th day of January, 2019. Hope you're having a great Thursday. Whoever you are, wherever you are, we're just glad to have you right here, right now, with us. If you're returning, welcome back. If you are here for the very first time, a special welcome to you. Either way, oh, we're glad you made it. I have a chart up of the S&P 500 Emini Futures. If you can't see the chart, go to our homepage at cfrn.net. On the right hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. You'll have access to the charts, to the discussion, to the show, everything CFRN. If you're away from the office, working off a cell phone or a tablet, go to youtube.com/CFRN/live during the live broadcast, and there you'll find us. No software to download, just run it straight from your browser. And thanks to the folks at YouTube for carrying the show. All right, I have up today a daily chart of the S&P 500 E-mini futures. We started talking about this way back. Remember when we had this sort of double top, triple top, whatever you will. These are daily candles, remember. And we put in a leg to the downside, a retracement, which became a high there, that little doji, and then another leg, and then a retracement, which gave us a lower high. Leg, which actually gave us a higher low. Retracement, which gave us another lower high, and then a leg, and we were sideways now back then for 1, 2, 3, 4 days, and on day 5 we took out that low and that low. Actually, we didn't take out that second low until this day. Not that that's important, but as we scroll on across, so from this leg we never got a decent retracement. As you can see, leg retrace, leg retrace, leg retrace. But what just happened? If you're on YouTube or listening to the podcast after the fact, we just got I've got to restart it for the folks on GoTo. Stand by.
Welcome to the webinar. You have entered as an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
I think we're back.
Yeah, sorry about that. Sorry about that.
Yeah, no problem. Things happen, as they say.
We are back.
All right. So I'm just trying to get the radio computer back up. There it goes. I guess it'll do its own thing. Okay, so back to where we were. We had a high, a lower high, another lower high, and this was the first time that we didn't, hitting this support level, that we didn't get much of a retracement. It's sort of a leg, and then a roll sideways, and then the drop. And then we had 1, 2, 3, 4, 5, 6, 7 red days in a row. Now look at all these green days. Yeah, we got a couple of red candles in there. Point being, we have now I haven't touched this in a while, but let me see if I can drag it without messing it up too much. Kinda close. There we go. So as we pulled up here, conventional technical analysis wisdom would say, well, that should be good resistance. Support, support, even support here. Back up. Seems like the market got off easy here, whatever that means. Think about it in light of where we are right now. Take a look at these highs right here, wicks mostly. The low, yeah, this is daily, and we got a low on the day of 26.3275 and a high of 77.75. That's not. I'm on the at ES. All right, let's go look over here. Okay, here is last night's. Today's the 24th, and so this was the open last night right there. And so our low for this session came in here at 26.30. The high came in here at 26.47. If we back up for a second just to get a glimpse here, we started out selling 26.54. That triggered 3 separate times, and the third time was the runner. 26.54 to 51, back above 54, down to 51, back above 54, down to 51. Not surprising, we know important prices, important areas are almost always tested. Then we had an alert to sell 26.40, which took us to 26.34, and it did so once, and then twice, and then a third time even. Now that target was 26.34, which, by the way, is last week's highest weekly trading zone, which we closed above. Now, price has come back to find support, especially today, at that 26.34/35 area. Boom, 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 boom. Now, the opening candle today, right here, 9:30, looked pretty quiet, and then 10 o'clock, this candle looks like we're going to the moon, but we don't. We just barely take out this high and this overnight high right here. Now back over here, 26.30 down to 26.20. So we had a 3-point, a 3-point, a 3-point move. And then we had a 6-point move. And then from 26.30 to 26.20, we had a 10-point move. Our final target there was 26.05, which we haven't seen yet. Price then got back above this 26.40 area, came down again, and then we had another alert, 26.25, which I'll highlight like that, 26.25, down to the same target, 26.20, which we saw. We actually put in a swing low there at 26.1250. Still not 26.05. So, in comparison to all of that, keeping in mind that this would have been holiday, yeah, up in here, Monday. So, all that, and all that, and now this. Perhaps this is symbolic of the gridlock we have on Capitol Hill. What do you think? Okay, let's look at the numbers from around the world, cash markets, see what they're doing. I don't mean to leave you hanging there, but there's not a lot I can add to that. Today is Thursday. Oh yeah, okay, so I don't have to be secretive anymore. I can share it with the whole community. We have a weekly trading zone at 2650/51. Okay, I'll put those on the chart here in a minute, but I just want to show you there's 50 and 51. So that maybe helps you understand this and this and even this. That's price running up against that weekly zone. Also, there must be a zone below right here. No, it's down at 2604/2605. That's the zone from 50.51 to 0405. Big zone, I know. And where are we? Stuck here in the middle with you. Just when you think price is going to get up and go, it doesn't. And just when you think it's going to plummet, it doesn't. Now, I always mention to you on Thursdays when I give out the weekly trading zones to the entire community, it might be a good idea to just jot them down because they will be beneficial this coming Sunday night on the Globex Open and early on into next week. Well, here we are on a Thursday, and the zone from last week, this 34.35, still being very beneficial. Okay, so once we got above that, I wasn't comfortable putting out anything else at this point to the short side. I mean, this 2640, could I drag that line further over? Yeah, I could. 2640, and you could tally up how many times that may have triggered. Oh, that got right to 40. This got above, and so there's one, and then there's another one, and then there's another one, and then some might say this is even another one. So with all this congestion in here, until the market can find some direction, it's kind of difficult to do anything with it. And since the S&P 500 is the ringleader, so to speak, it keeps the other markets a bit directionless as well. All right, so I said we would look at the cash markets from around the world. We'll do that right now. Then we'll go to Michael, get a recap of what happened in the live trading room today. All right, here in the U.S., the Dow is down 43 points. NASDAQ is up 37. S&P 500 is up less than a point. The Russell 2000 is up 10. In the commodity basket, crude oil up 61 cents, trading 53.23 last, and we did have crude inventories today. Michael will probably go over that with you. Gold down $3.50, trading 1280.50 last. In the Asian markets, at the close, the Nikkei was down 20 points. Shanghai was up 10. Hang Seng up 112. And in the European markets, the FTSE down 24. DAX up 58. CAC up 31 at the close. Now, this is a number of days in a row where the Asian markets and the European markets have shown us no big numbers at all. Still waters run deep, as they say. And even in the U.S. market today, I'm going to refresh one more time and get a fresh pull there. Okay. The Dow still negative 46 points. S&P trying to lock in a 1-point gain. NASDAQ up 35. and the Russell 2000 up 10. So there you go. Those are the cash markets. We'll switch back to the world of futures. And now Michael will give us a recap of what happened in the live training room today. Daniel, I'm looking at your question. Do you never trade around news? Or is that a question for you?
Well, it was for you, but I'll go over it anyway. You know, when I take the charts back here, just right now.
Okay.
Right now, I'll go over it and show them some things.
Sounds good.
Okay. So I have the charts, and you can see.
Yep. Here. Got them. Okay, it's all yours.
Okay. All right. Good afternoon, everyone. Let's bring this up. Okay, good afternoon, everyone. Today is Thursday, the 24th day of January 2019. Before I get started, there's a couple of things that I want to do. One is to post this little link. Hang on, let me find it. Here it is. Shift Control C. Okay, this afternoon at 2 p.m. Eastern, Bert is going to be doing a webinar for anyone who is new or who just wants to see everything that I do in the morning in slow motion. Bert is going to be doing a webinar this afternoon at 2 p.m. I just posted the link to that. Okay, that's Bert in slow motion, doing what I do in the morning. Okay, that is one thing. The other thing is, if you are an active partner, there's a partners meeting tonight, 9 p.m. Eastern time. You'll be sent a link to that closer to the time of the meeting. Okay, so if you don't have it right now, don't worry. You're not the only one who doesn't have it right now. Nobody's got it right now. Okay, I'm saying that for all the active partners. If you are considering becoming an active partner in the meeting tonight, we'll discuss anything you want. Okay, anything you want. I think last week, was it last week or the week before? I don't know. But anyway, we record the meetings. So if you can't make it, we record them and we put them in our Telegram channel. We used to put them on our website, but it got to be too big for the website, really. And you know, like the first 100 of them now, we've probably done over 350. And the first probably 100 of them, for some reason, they're not working on the website anymore. I don't know if that's because of the website or because, oh, I don't know. We put them there and they worked, and now they don't, is what I'm being told. So we gotta work on that. And the way that we're working on it is we're posting them in the Telegram channel now instead. It's actually easier to post them in the Telegram channel than it is to post them onto the website. I'm looking for it. Here's the weekly workshop. See, this is the weekly workshop channel right here. Now you have to be an active partner to be in there. Okay. If you're not an active partner, you can't get in there. You won't get the channel. Okay. That said, as I said, it's the 24th day of January 2019. If you have not taken the free trial with us, go to the home page here at CFRN.net, and right over here on the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, where on this page, all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know you took the free trial. You'll also be sent a little notice like this. This is what's going to pop up as soon as you hit that. It says, we'll also send you an email with full details on your free trial. That's what we're going to do. But you got to hit that confirmation link first. Okay. Okay. Now, today, Dwayne was alluding to the markets and how they were not great today. Well, today was an example of it. We were red today. We made 8 ticks in the euro, 1 tick in crude. We lost 2 trades in a row on gold. We only took 2 trades on gold, and we lost both. So we were minus 16 there, and we were plus 4 ticks on the ES. That put us at minus 50 on the day, and we took 9 trades to do it all. So on the month now, we're at $1,713. That's over 16 days, averaging $107 per day. Okay, same thing on the year. All right, we're averaging $107 per day. Now, we'll look at what we did. On gold, we were looking to go long here, right here, on the close on the trend line right there. Okay, and it pulled back, stopped us out, and then it went and did what we wanted it to do. But it stopped us out. Over here, we were looking to go short on the bounce. It was actually, let me move this trend line. I mean, not trend line, arrow. And this arrow. Because it wasn't a bounce off the BBC. It was a down close below the trend line right here. And it stopped us out to the tick. And then it went down and got us to a point where we could at least get our stop to break even. Okay. And over here, we didn't have anything. That was it. It got really choppy after that, and there was nothing else to do in gold this morning. So we stopped out twice on gold. That's unusual. But on the euro, wow, look at the euro. During the break here, the euro really tanked. How many shorts could we have gotten out of that, you think? The thing to look at is down here in the slingshot, because you know it's down below the BBC. So in the slingshot, how many times did we get a pullback on the green line? There's one. There's one. There's one. There's one. Now the cycle is going up too steep, so you can do anything until over here. Let's see. Right here. And right there. And then the cycle is going up too steep again. But that was all during the break. During the morning session, we had a break even right here. And right here, and here we had trades that we missed. And then right over here, we had a shorting opportunity. We picked up 8 ticks on that one. Okay. Down here, if you stayed in it, that's good. If you didn't, because the green line got down into the cycle and you trailed your stop really close, which is what we advise. No, gold hasn't been, Brad. Then there was no trade here because the green line was not above the cycle. Okay. There was a break-even trade right here, if you got it, and I didn't. And then all the stuff during the break that I just pointed out to you. So we were plus 8 on the euro on the morning. And crude. Let's see here in the crude. Excuse me. Now I highlighted this area before the crude inventories came out, saying to expect price to get back to that area and probably stick around that area. And Daniel, let me address Daniel's questions first. Basically, what he was saying is, with the crude inventories being a big build, meaning there's more supply, wouldn't you expect price to go down instead of up? And yesterday, when the API numbers came out, price was trading right here. And the API numbers came out showing basically what was going to happen with the inventory numbers. And price did go down. It went down. Well, first it initially went down to here. Then it came back up and hit this level. Went down again. And then stayed down a little while. Traded down here. Came back up and hit this level. Then it went through it. Then it came back down. Way down here. And then it went back up and hit that level. And then today, when the crude inventories came out, right here, it went up and down, hit that level, and now it's going back up. The reason that I'm pointing this out is because it was already built into price. The down was already built into price. Okay. No, nothing this week, Brad, on the crude options. I think it's going to get back down to this area, but I don't think that's worth putting an option on. That's not far enough. Okay. And that was, Daniel, I was responding to your question that you had earlier in all that. And hopefully that made sense to you. It was already built into the price. And then they were just waiting for a reaction. Okay, but what we had on crude, our first trade was right here. We took a 1 tick profit. Then it got really choppy and we didn't do anything. And then the inventories came out and we didn't do anything. There was a long here and a long here that we missed. It was moving around pretty quick right here at that time. And then right here, we had another break even. Right here, there was a nice short that I missed. And another break even there. And another break even there. Now getting into the break. Let's see. Nothing there, nothing there, nothing there. There would have been a momentum long trade right here. That probably would have stopped you out. Another one right there that worked. Another one right there that was fine. Another one right here. It may have been a break even. Then it changed directions on you. And we had to break this dynamic support. Yeah, it would have been a choppy mess, really. Right here, there was a short that probably would have stopped you out, and nothing else in the crude in that time. On the ES, let's see. When is a good options trade on the crude? I'll show you in a minute, Brad. Okay, let me just finish up with the ES here. On the ES this morning, it was right here at 9:39. There was a shorting opportunity right there. I'm guessing it was going into the low of the day because I don't have it highlighted. And the low of the day is right here. But right here, coming off of that, there was a long there and a long there that both would have been profitable. Then there was a lot of chop. And there was another long here. And nothing right there because the cycle was going down too steep. That's why I don't have it highlighted. We had a break even right there. We had a break even right there. And I know we had a +4 somewhere. I don't know where. But we had +4 ticks somewhere that I apparently didn't highlight. And yeah, because we had that +4 early. It might have been right in here. This might have been our +4. We had that early on. It was our second trade this morning, I think. I'd have to go back and look. But anyway, there was a long here on a close up above the trend line. And here the cycle was going down too steep for me. That's why it's not highlighted. We had a break even there. And then in here, I was saying the cycle was too steep again. Even though it wasn't really that steep, I just didn't want to get into it right there. There was a shorting opportunity right here, though. And let's see, now we're into the break, and we'll see what happened during the break. Right here, there was a long opportunity. It would have been a momentum long trade. So if you stuck it out, or if you didn't move your stop to break even immediately, then you would have had some profit opportunity there. Okay, and then it changed directions again. And you would have had to have broken this dynamic support, which it did on this bar right here, this blue bar, to be thinking about shorting with momentum trades, because that's pretty much all you had in here. And you only had this one here, really, was the only one. Okay. And that and that was our morning session. Okay, so we didn't have a lot of stuff going on in the morning session, sadly. But I mean, we did manage to get off 9 trades, and we missed some good winning trades. But we ended up -50 overall on the morning session. Okay, so if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 24th day of January 2019. We made 8 ticks in the euro, 1 tick in crude. We lost 16 ticks in gold today. So look, that put us at negative on gold, plus 1520 on crude, plus 300 on the ES. And today we're plus 50 on the ES, plus $50 per contract. We ended up minus $50 per contract on the morning session. We took 9 trades total. And on the month now, we're at $1,713. That's over 16 days, averaging $107 per day. It's the same thing on the year. Now, if you have not taken a free trial with us and you want to take the free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that and be brought to this page where all we ask for is your email, your first name, and how you found us. Click on the submit button. When you hit the submit button, you'll be sent a confirmation link. Well, you'll immediately be sent a confirmation link. You'll have to click on this too, or read this and close it. But you'll be sent a confirmation link, and you must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. Okay, we don't know that you took the free trial if you don't click that confirmation link. Okay? Okay, and with that, we will wrap this part up and pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. And Dwayne John is out in the audience, if you're ready. Okay. Dwayne is not ready.
I'm ready.
Okay. There he is. He's ready now. Yeah, gold has been a mess for a while, Brad. And I was going to go back and tell you what, a good options trade.
I got the charts now.
You do?
Yeah.
I'm just going to answer his question.
Okay.
I don't need the charts to tell him. But a good options trade is when, well, there's a couple of different things. One is on the ES, if on the first or second day of the week, we are at either the highest or lowest weekly trading zone. That is a good options trade. On crude oil, for me, a good options trade would be when the API numbers come out, wherever price is trading at, it almost always goes back to that level. Like Dwayne always says, important levels are almost always retested. That is the case there. So if when crude inventories come out, the market has some reaction and it pulls it away from that area where price was trading at when the API numbers come out, then is a good options trade. Either a put or a call, buying, not selling. And depending on which side of that level it is on, like right now, it's way above that level right now. It's trading at 53.42, and well, it's almost a buck away from where it was trading at when the API numbers came out. But it's already gone back to that level several times. All right, it's probably hit that level since yesterday afternoon. Where it came away from that level. It's gone back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 times back to that level. Okay. When it pulls far away from that level, and this is like a week-long option that you're looking at, but it's already gone back to it. It's already done what it should have done. So I wouldn't do anything this week with it. I'll let you know when it comes around. I'll let you know. Okay. And this usually happens on Wednesdays, not Thursdays. Because we had the holiday this week. The crude inventories came out today, not tomorrow. I mean, not yesterday. Sorry, not tomorrow. Okay. Dwayne John's out there. If you want me to open his mic up, I can.
Yes, I'm ready.
Okay. Sorry.
Oh, no worries.
There you go.
John, welcome to the show. John? Is this thing on? Okay. All right. He's logged in. His mic is open. Yes?
Yes. Yes, okay. Indeed.
Well, fair enough. All right. So we can see on the chart I have up of the S&P price, just it's coming right back to that 2634/35 weekly trading zone. I'm going to leave that there, and I'm going to take last week's zone, and I'm going to just slide that down so that it can become this week's 2604. There he is, John.
Hi there.
Hey, welcome to the show.
Thanks for the invite. Listen, today is a pretty interesting day in a lot of ways. Should probably start off with the fact that I don't know whether you picked up on this, but the jobless claims came in at 199,000. That's the lowest number in 50 years, and it's, as you know, as far as I'm concerned, it's an all-time record low, because 50 years ago there were only half as many workers and there was only half the population that we have today. So on a pro rata basis, it's the equivalent of, you know, less than 100,000 jobless claims, and the United States has never had that, period. I think the lowest number is like 160 or 170 or something like that. So by a considerable margin, we're making new record lows in unemployment claims today, and the fact that we've dropped 14,000 from the estimated and from the actual, and the estimate was we dropped 20 plus thousand from the estimate, is pretty remarkable, frankly, especially given the government shutdown and all this talk about the economy slowing and everything. You know, in a kind of a curious way, and you probably didn't hear this anywhere else, the economy may be actually tightening because of the government situation in some respects. You know, anytime the government gets out of the way, it's good for the capitalist part of the economy, which is a kind of a strange thing. So what this implies, you know, there was a shocker of a jobs report last month that blew everybody away. And to be fair to us, you know, we have said to be prepared for upside surprises on the job numbers, because, you know, with the economy growing at plus 3%, we should have correspondingly about a 300,000 plus job number. So it came a bit late, but remember, they're upwardly revising previous months, and Trump has created almost 5 million jobs in his first 2 years. I mean, if he can repeat that in the second 2 years, 10 million jobs per presidential cycle is a pretty incredible performance. It's about the best ever, because if he goes 8 years and that is maintained, I think he'll be the greatest job creation president of all time, even more than Clinton. So that's kind of where we're going right now with this, especially if this economy is stronger than people think, and doesn't get any kind of a dip here, either jobs-wise or growth-wise, in the next few months. And look, the other big news today is the semiconductors have absolutely exploded to the upside today in a massive way. There is a number of semiconductor stocks that are up more than 10%, some are up 15%. And Xilinx, which is a stock I've had on my radar for a long time. As a matter of fact, I put out a buy on it long, you know, last year or even the year before.
What's the symbol?
XLNX.
XLNX. Okay, I'll bring it up in just a second here. XLNX.
Correct.
Okay. Yeah.
I mentioned it before, actually, as a potential takeover target when in a previous show a year ago or so, when we were talking about Maxim. We had Maxim, Xilinx, and I forget the third takeover stock that we had in mind, but I'll think of it. And when I do, I'll remind you. But we had the Maximum, Xilinx were two kind of favorites. And look at this stock. I mean, it's up. You know, at one point it was up, 18% or so today. So, this is a huge break over 100. I'd be buying any pullbacks in this stock right now because if you look at the longer history of it, it looks like a slower motion version of NVIDIA. And NVIDIA has been, divided by 3 from where it was, from its all-time high, and this stock is making new all-time highs. So, in a kind of a strange way, this stock is accelerating to the upside, and so is NVIDIA today. But prior to that, it's been, taken apart on the downside. But remember, NVIDIA went from our regional buy signal around 27 or so, 20, 26, 27, 28. A couple of years ago to north of 280. I think it got to. I think it got almost to 290, somewhere like that. Yeah, it got up just shy of 300 before it took on this plunge.
Yeah, and it's never, we still haven't closed that gap. There's been
I mean, look, NVIDIA, even though it's rallying today, I wouldn't bet the farm on it. And as a matter of fact, it kind of reminds me of Tesla. Tesla in a more rapid, has had a more rapid decline, if you want to put that up, because TSLA. Okay, what's interesting about Tesla, I have a possible target of about 270, but it may not get down there. If it does, I'd consider. We actually put a sell and short out on Tesla right near the highs at probably around 365, 370, somewhere like that, before this plunge, and it's been a pretty devastating plunge. Considering.
Did you just lose John?
It was a stock.
Okay, there you go. Okay, he's back.
Can you hear?
Yeah,
Hello?
it was
Hello?
I can hear you. Can you hear me?
Okay, good. Yeah.
Okay.
But so, in spite of the steep fall that Tesla's taken, it doesn't look like it looks like it could turn. Somewhere between 270 and where we are right now.
Yeah, this is a weekly. This is a weekly chart, and so it held this time and it held this time. The question is, if we get there, will it hold this time?
Well, what's got me excited about this stock is the fact that it's a kind of a 3-wave pullback, and if we start out from here, from somewhere around 270, 280, and start going back up, we might have a whole new impulse wave to the upside. That could be, quite surprising given the steep correction we've had. This stock has a habit of coming back from the brink every time, and I think you've got to keep in mind the possibility that could happen again.
Well, the CEO is one of the greatest showmen on earth, so he's very good at pulling it back from the brink.
Exactly, and he's got a huge following, and there's a lot of people who believe this stock's going to hit new all-time highs before too long. So, the importance of the semiconductors. Now, for some reason, we're breaking down today. The Dow's down 100, so it's not kind of a perfect day by any means. Even though the semiconductors are going through the roof, and ordinarily that would be very bullish for tech stocks and the market in general. I mean, it's whenever the semis are leading by this kind of a margin, it's almost to buy the mandatory buy. But I've noticed this morning that the semis have been going one way and the market's really been going the other way. And now the market's starting to break down. And actually the structure of the S&P and the Nasdaq and things is a little bit potentially kind of negative to another leg to the downside. So quite a big one, but as well. So unless we reverse upwards later today or going into tomorrow, I would be I'd be pretty cautious, you know, no matter how bullish the semiconductors are. I think the semiconductors is sending us a very good message, just like the employment numbers are. But another thing is that in spite of the, and I was watching this morning, in spite of the employment numbers being as, you know, as bullish as they are, the bonds are going higher. So the bonds are not necessarily buying the strong economy argument. They may be taking the shutdown into consideration. So there's something bothering the Dow today because it's down a lot, and you know, it would be very bad if we really went a lot negative on all indices today and gave back a lot on the semiconductors. That would imply there's another, you know, fairly hefty correction ahead. You know, there's a lot of factors. There's this China thing. There's you know, the shutdown itself as well. There's a few Democrats starting to come over to the solve it, you know, resolution side, which is encouraging. So I think you ought to be ready for the possibility that there might be a surprise resolution even over the weekend or going into next week. And I think that would be very bullish for the market if it happens. So you got to be ready for that. At the moment, the VIXs are heading higher. And I'm quitting using the VXX because I think it's going to stop trading sometime in February anyway.
Why is that?
I don't know. They're going to use VXXB, which is identical.
Okay.
But the one we're going to use from now on is the TVIX, because it's more leveraged than it's actually more leveraged than the UVXY and the VXX. So
there's the TVIX. That's a weekly. Let me break it down to a daily. Okay. TVIX.
And yeah, right. You can see the way we were at 25 on this thing back in October.
Yep.
Okay, and we went from 25 to 65. And then we had this
85, yeah, 25 to well, actually
65, the first one, and then we went from 35 to 85. So this vastly outperformed the VXX. So it's got more risk, you know, in terms of, you know, if you're wrong, you can lose more, but you can make more if you're right. So otherwise, it's kind of identical to the VIX, you know, in terms of its behavior. So it's seems to be the best, you know, it's liquid and it's, you know, it seems to be a good trading model. Right now it's going back up, and that's a little bit of a, even though we had a kind of a reversal day yesterday, we don't know whether this is just a little short-term uptick glitch here, or whether it's going to push higher and sort of take out that 55, 56, 57 area. If it were to do that, I would say we're in some trouble for a pretty big down leg. But, you know, things could change before the day's out. This may be just a, you know, we could get up to a little bit higher than where we are right now, maybe 51. If we can't get through 51, then I'd say, and it starts to come off, then you could be looking at the market getting ready for a big rally. So the semiconductor index SOXL jumped from 80 something overnight to 103 this morning. It's just pulled back to 102. You know, it could come back and test 100, just the same way as Xilinx could, and that would be a pretty good point to buy, or a little bit below 100 if that happens. And obviously, if the market is recovering, that would be, you know, supportive, because I think if the market does turn, the semis are likely to you know, continue their run from today, especially if they have a pullback. Then you've got a better entry point. As you know, we talked about IBM yesterday. I think
we did, yeah.
It's up. It gapped higher. It's not running today, even though it's a semiconductor. Intel is as well, and we talked about that yesterday ahead of time. Actually, Intel's up huge today. AMD is up. So,
what's the reason behind the gap on IBM yesterday?
They beat. They came out with some good numbers.
Yeah, I don't see the little earnings symbol down here. That's why I was curious if that was.
Oh, maybe it was maybe it was guidance. They could have something good. Something came out that was good. Okay. Good for IBM. So, the overall picture looks pretty positive. Also, we mentioned lumber yesterday. Believe it or not, it looks like it's going to go limit up today. It's up 1340 already, and so we made a good call there. We also mentioned the coffee, and the coffee is breaking out to the upside now. I think the worst may be over for coffee finally. The orange juice has been beaten down a lot. I would probably put a buy stop at around 119 on the orange juice, because there's reports of problems with the orange crop that could be a precursor to some sort of a short squeeze, and you've still got the possibility of freezes damaging the crop. Given how cold it's been lately, there's a pretty good chance that a frost could extend down to Florida or the Texas area, South Texas. So that's something to keep in mind as well, because even though orange juice is well off its highs and looks kind of a little beaten up right now, if this thing gets lock limit up, it could go up quite dramatically. So something to keep in mind. The cotton has also been not acting too badly. I'm not saying it's a buy today, but it if it starts taking out 73, probably 74, it could turn into a strong buy. The grains actually are holding their recent gains, and the other thing is the gold initially this morning, possibly on that jobs report, was initially down. It tested this 1275 area in the spot in 1280 in the April, and then it shot up almost $8 or so. Looked pretty good, and the dollar tanked, and then all of a sudden, bang! The dollar has reversed and is gone back looking very bullish, and the British pound, which had gone up to $1.31 1.25 or so. I was looking at it yesterday, thinking it might pull back, and that's exactly what's happening today. So we're coming back to the 130 area. If it holds, that it may be a buy again. But the currencies in general are getting knocked down today because of this dollar issue. So it may cause the gold to hang around in this the lower end of this range. But if it doesn't break down much more, I think the gold looks very good. As far as I'm concerned now, if the gold exceeds 1290 on the April, it would be looking like it's going to go break out to new highs.
Well, the chart I have up now is a daily, and we've been stuck at this 50% reverse fib here for quite a number of days, a couple of weeks. We've been caught in this area, and so it will eventually break one way or the other.
I mean, look, it could come back to 1260 on that chart, actually. Because it looks like it could break down one time, sort of test the previous, that support there from before, and then it could go from there, or it could just go straight up from here. It's hard to say. But the other thing that is going on today that is a change, distinct change, is, and we mentioned this yesterday, starting to honestly look kind of dynamically bullish. And I don't say that very often, but when I do say it, it usually means we're in a pretty extraordinary kind of a developing upside move. And platinum kind of turned on a dime. I said yesterday on the show, it's getting, it's looking like it's bottoming. And it's been very reluctant to go up, but we're once again over 800. And kind of looks pretty good here for a continuation.
Okay.
And strong move if this continues. Now the other thing is, we just got up to 1400 on the palladium, making it the most expensive precious metal, maybe for the first before, but it hasn't happened for a long time, where palladium has been this at new all-time record highs, the most expensive precious metal. And so even though people have been using palladium for these car exhaust, what do they call it?
Catalytic converters.
Right. They may be gravitating towards platinum, and just for the price differential, and that could be a game changer in of itself. So these are all things to keep in mind. And then look, the shortage of palladium is obviously big, and the Russians control it, and they who knows, they may be running out of palladium too. So that may force a shift to platinum, which could be a pretty good argument for an unfolding bull market. So it's probably a huge decision to go from one metal to the other, because there's a lot of different kind of, they've got to do a lot of changes, probably quite costly to change back to platinum if that's what they're doing. That's one argument. Other than that, there may be shortages of platinum developing as well. Remember, all these metals, gold, silver, palladium, because of the price, and platinum, are probably all in their own right lower, a lower output today than before, and they may be headed for continuing lower output. You've got platinum's pretty big in South Africa, and there's all kinds of mining problems in South Africa. So it's not inconceivable that out of this sort of long basing out pattern that's been going on with platinum here over the last 6 months or so, that you could suddenly have a runaway bull market to the upside on platinum. And that in of itself is very bullish for gold, because if platinum suddenly gets up to 1400 again and starts taking out palladium highs, and actually starts competing with gold for the most expensive precious metal, then you've got a whole new ball game developing. And I think that platinum holds the record. I'll have to go back and check, but or maybe you have it on your charts, but I think platinum got up above 2000, and therefore it actually beat gold at all-time highs. Certainly if platinum starts to outperform gold, then it's time to sell the farm and buy gold, frankly. So
gotcha.
That's something to keep in mind.
Right. Well, John, it is Thursday, and Dr. Tom is with us. Hey, Dr. Tom, welcome to the show.
Hey, how's it going?
Pretty good. Happy Thursday.
Same to you, man. Listen, before John leaves, I just want to mention, I want to talk about the Brexit today.
Okay.
Both the political and the economic implications, because of course the political implications affect the economy. So if you'd like to stay on and contribute, John, love to have you.
How do you
the way you think?
Thanks. Did you get the gist of my platinum theory there? You know, because
yes,
it is. I tell you what, the day that platinum crosses over above gold again, it will be a mega buy signal. Believe me, it'll be something pretty epic when that happens.
Yeah, I think so. It's like platinum and gold have been in competition for a long time, but it would be very interesting
now,
to see that happen.
Let me ask both of you guys while you're both on here, and we'll get right into that. But I'm just curious what your thoughts are on what's going on with Maduro. Venezuela's breaking relations with the U.S., giving American diplomats 72 hours to leave the country. The U.S. State Department has said it will not comply with that order. Wow.
Oh boy.
Can we do that?
I don't know, but you know, a while ago they drew up plans for an intervention in Venezuela and under Mathis, and I wouldn't be surprised if that may be one of the reasons why the market's going down today, and the dollar's going up actually, because there's you know, there may be things happening where they're moving. They may already be moving some, you know, naval ships and things and aircraft carriers towards Venezuela, just as a kind of a warning to this guy. And you've got about 20 or 30 nations worldwide now who are backing the new, you know, the leader of the opposition. And you've got a handful of the other, you know, you've got Cuba, Bolivia, I think, Moscow, Russia, Mexico, and one other country. Mexico may switch because it's hard for Mexico to go against Brazil, Argentina, Colombia, and just about the rest of Latin America. I mean, pretty much all of Latin America is going against Maduro now, and that's a pretty big deal.
And as far as whether Trump can do that or not, he can, because Maduro is no longer in power officially. I mean, he's been replaced, and so he's not the head of government. He can't order U.S. diplomats out, and if we did leave, it would be an acknowledgement that he is in power. So I think Trump did the right thing. We may end up with some dead diplomats, but if that happens, then Maduro's going to die. So.
Yeah, and Canada's on board too, you know, so it's kind of unusual that Canada and the US are aligned, and all of Europe, the whole of the EU is, I mean, the EU is 26 countries alone, so really it's about 40 or 50 countries now that that are siding with the, you know, with the good guys. So,
yeah, we don't know very much about the replacement guy. We just know he's the opposition leader. Haven't heard a lot about him, what his policies are. But I think people are thinking anything would be better than this jerk.
He's very charismatic. I saw him speak yesterday, and he's young. He's young, but he's looks like you know, maybe he may be the anointed one. You know, and it takes you know, it takes guts to do what he did. So it's and you know, with the whole world ganging up on Venezuela right now, it's sort of looking like Maduro's days may be numbered.
Yeah, this may be another Falklands situation, you know.
Yeah.
The Falkland Islands. Boy, I haven't heard that in a long time.
Yeah, and it's the same with Panama. You know, we may just come in and occupy until things are settled down, and then we'll pull our guys out. Yeah.
Right. It is similar to Panama in a lot of ways, actually. You know, where you had this rogue dictator, and the same guy. You know, same. I mean, this whole regime has just ruined this country in a shocking manner.
Okay. You need to get that?
No, it's okay. So, what are you going to tell us about the Brexit, Tom?
Well, I've got a little PowerPoint here, and
all right, let me ship it over to you.
That was a hint, wasn't it?
Yeah. Here we go.
Yeah, it's settled.
There you go. Oh, and all you got to do is accept, and you're in.
Yep. And here we go. How will the Brexit
Nice
impact
part.
the U.S. economy and yours? So, let me just jump into it, and you guys want to chime in? Go for it.
Okay.
The Brexit, of course, for the few that might not know, this was the exit of the Great Britain from the EU. So will no longer be a member state as of March 29th, unless some political things happen. So you can see down at the bottom this combination of the word Britain and exit. There's no shortage of opinions on what it's going to happen. A lot of people, particularly the establishment, doesn't want it to happen. In 5 years, there will no longer be a United Kingdom.
Will it be an ununited kingdom?
Well, that's actually part of it, because half of Great Britain wanted the exit and half didn't, and it wasn't a huge margin. It was very Trumpian. I mean, this vote took place at the same time as Trump's election, and nobody thought it would happen, just like nobody thought that Trump would get elected, except a few pretty smart people. So who knows? But
I was going to ask, what effect is this going to have on the overall British Commonwealth?
On the okay, that is something I'm covering a little bit later on, because that was what I alluded to there. The British Commonwealth. I mean, it's a little kind of a confused place over there. You've got England, which people think of as the lead country of Great Britain, and it is the largest and strongest. But England did not vote for the Brexit. Okay. And it was, I think, Ireland and Scotland. No,
Ireland, Scotland, Wales.
Wales and Scotland that wanted it, and Ireland. The Ireland is part of the Britain voted for it. So the other part of Ireland, the breakaway part, the Republic of Ireland, is currently a member of the EU. So one of the consequences of all of this is, since Ireland didn't want to break away, it may break off from and the two Irelands may merge and be an EU state. So EU loses one state, gains another. It's all very interesting. But, you know, like I say, there's all kinds of people with all kinds of opinions. Some people think it's going to be good, you know. Both the EU and the United Kingdom will grow, and it's not going to have any harmful effects. I think short term there will be some harmful effects. But, you know, here's a map. You can see England is by far the largest. Wales, little tiny country, great country, I love it. Scotland, the second largest. And then Northern Ireland, which is aligned currently with the greater British economy and politics, and the Republic of Ireland, which is separated. It just kind of gave you a little bit of picture of it. So, just briefly, how
you've been in South Wales, Dr. Tom?
I have.
Well, Abergavenny, Raglan, around there, Lanark.
Raglan, I think I remember that one. We just drove around, and
nice countryside, right?
Oh, it's beautiful, and I got to see a Welsh traffic jam.
Yeah, well, I know what you mean.
About 300 sheep blocking the road. All the cars had to wait, you know.
Yeah. No, I went to school right in that area, actually.
You did?
Yeah. So,
aren't they nice people?
Oh yeah, yeah.
I love their accents, and what I really love, because I'm a musician, I love the fact that this is a very musical country. it's not so much now like this now, but it used to be a few decades ago that every little town and hamlet had a choir. And
no, that's a big thing. Yeah, the Welsh are famous for their singing, and of course you got Tom Jones, who came from Wales, and Michael Jordan married a beautiful Welsh woman, and the actress, So Wales is a great place. I mean I've been everywhere in Wales. I kind of know like the back of my hand. So.
Well, if I ever wanted to get a retirement place, you did, Michael?
Yeah.
Is that Michael?
When I lived in Oxford,
okay.
Me and my buddies used to go there. It was a club.
It's not that big of a sprint to get there for the weekend. I mean, a lot of people do. So,
yeah.
Well, if I were to just pick out a retirement place somewhere in Great Britain, it would be Wales. I just really like it.
The Welsh are kind of leaning towards staying in Europe, and the Scots are very, very virulent about staying in Europe. And then you got the City of London, which would vote. That's about 90% in favor of staying in Europe. So the Brexit thing is kind of splintering a lot, and it's hard to they may. There's a sort of they're talking about a triple referendum now. I think they got a no deal Brexit, a deal Brexit, and then a remain, and that could actually sway more people to remain. And in a recent poll, there's about 57% remain now. So if it was taken today, and if there was a remain, if there was a vote. If they decide to go ahead and have a second referendum, I think the British pound would go through the roof, and I think that would sway the vote because people have been I think the British people have felt they've been cheated with the pound going down from $1.50, $3.60 down to $1.20, $1.30, and if the pound went back up again, I think people would be swayed by that and decide, I prefer more money than less in a global sense. You know what I mean?
But at this point, it could go either way. But politically, my two thoughts on it are the majority of the people in England and Great Britain in general did not want to join the European Union originally. The majority were against it.
Right.
And most people, when you bring it down to the politics, they're not happy that like 80% of their laws are coming from Brussels, and they only get to do 20% of their own governing. So they want to get back their sovereignty. But then when it comes down to financial issues, I think it could go either way. Theresa May lost a big vote. She negotiated the best deal she could with the EU, and they said, we're not going to change. They're sort of like Nancy Pelosi, this is the deal, that's it, no negotiating. But the Parliament still has to approve it, or else we did go to a no deal exit, and the Parliament flat turned it down. And it's a real interesting dynamic because the people that voted against it were both Remain and Leave people. Okay, the Leave people voted against it because they want to leave. Some of the Remain people voted against it because they felt it wasn't a strong enough deal, and that Great Britain was being cheated. So it would have been very hard for her to win that vote.
Yeah, the fourth option, if you like, is they could stay in the customs, in the trade, effectively maintain the trade relationship without the governing relationship, and that's probably something everybody could live with.
Well, that's what the slide we're looking at is about, really, because initially it was just a coal and steel community. It was basically, I think there were 6 countries in 1951 that agreed to allow sales of coal and steel amongst their countries without taxes. And then they expanded it in 58 to more countries, to an economic community. Again, basically more about tariffs than anything else. In 93, the Maastricht Treaty made it a lot more formal and made it more what Churchill was looking for, which was the United States of Europe. But over the years, eventually it became 28 member states. But the majority of the citizens of nations, including England, that joined the EU, were opposed to it. Now, these three categories are not all the people in all the nations. The ones that are opposed to it were opposed for three reasons. One, that citizens weren't even allowed to vote on it. The politicians, parliaments or whatever, made the decision. That ticks people off. You're going to make a huge change, give up your national sovereignty. The people should be consulted. There were a number of nations, I think 5 or 6, where they did hold a referendum, and the people said no, but the politicians ignored them and joined anyway. And then, of course, there were a number of nations where there's a referendum, and the results were questionable because of the way the referendum was worded. But it's safe to say that the large majority of the nations that joined the EU, the large majority of the people, did not want anything to do with it. And it was, to a large extent, had to do with money. When you give up your currency, you give up control over your economy, you've given up your sovereignty. So it's kind of like what happened here in the United States. Most people don't realize it, but the 13 original colonies were sovereign states. They were countries, they were nations. We still talk about the state of Israel with the state of France, but in the United States, a state is just a political subdivision of the United States, just like a county is a political subdivision of a state. But that's not the way it was back then. Most people have no idea this, but these were 13 sovereign nations. They each had a constitution, okay? Interstate commerce had to be regulated. They did not agree to become a country. And it's the same thing as happened in Europe. They didn't agree to become just one big homogenous country. They agreed to get together for basically financial reasons. But our states had their own currencies. They gave up their currencies, gave up power, and then the more and more power became centralized, the less freedom there was for the people of the United States and the states themselves, and states' rights were eroded to where the states today have very, very few rights. Federal government controls everything. So that's what's in the process of happening in Europe, and a lot of people just don't want that. So England or Great Britain did the same thing. They were one of only 4 countries that originally did not join the Eurozone, which is, there's the European Union, which is 28 nations, and then there was 24 nations, I think it was, that were part of the Eurozone, which means they gave up their currency and adopted the euro. But the nations that didn't were in a much better position to exit, all right? And so that's what happened here. Great Britain kept the pound, and so they had much more financial power, and it made it possible for them to vote the Brexit. There was a little bit about our country. Okay, anybody else?
No, not for me. Go ahead.
Okay, well, as I said, it was conceived initially as an economic cooperation area, but today, magically, we have a European Parliament. We have European courts. That was never envisioned initially. A European Central Bank. They're proposing and really pushing for a European Union military. Right now, they sort of have one, but it's kind of like NATO. The different nations contribute troops and material as needed for various different military initiatives, but it's not a European Union military under central command. That will probably happen. Nowadays, they refer to people over there not as a citizen of France or Germany, but as a EU citizen. Their license plates, I showed one here before, EU license plates. Tens of thousands of EU laws and regulations have come from Brussels, most of which are smothering, crushing businesses, just like we have now with our federal government, and just like the president has been trying to squash a lot of those regulations, and businesses are doing better as a result of it. And of course, the people who, like the European Union, are pushing for what they call an ever closer union. This is really interesting. This is a chart. I apologize for the quality. It was the best I could get. In orange, you're seeing the people of these different nations that have said, this is a opinion poll, that some of the powers that Europe has should be returned to the national governments. So that's in orange. The gray is leave things the way they are, and by far the smallest number of people think that national governments should give even more power to the EU. So you can see that in most cases, the strongest one of those opinions is give us back some of our own national power. So in just 25 years, we've gone from a economic cooperation area to where we have all these, we got the European Council, which is the presidents of the various different European countries. You have the Council of the EU, which is the ministers of those countries, the European Commission, the Court of Justice, which can override national courts, European Central Bank, all kinds of different organizations that nations have. So they're making the European Union into a nation. And here's their headquarters.
Nice.
Yeah, I wouldn't mind living in the penthouse there.
Yeah, right. Exactly.
Up there on the left, it looks sharp.
Yep.
But here's the way it looks. MPs, in England they be called MPs, members of Parliament, so they call them MEPs, members of the European Parliament. These are directly elected, and they represent the 500 million people that live in the current EU. They basically elect the president of the European Commission, and they share power over the budget and legislation with the Council of the European Union, which is kind of a weird situation. I guess you could compare it to a House and a Senate, maybe. The Council of the European Union is much smaller. Instead of 751 people, there's only a few dozen, and these are government ministers who share power over the budget and legislation with the European Parliament. The European Council is over all of it. That's in the center there. That's the heads of state of the different nations. The European Commission is the executive body. Okay, so you could think of the Parliament as our House of Representatives because it's more representative. The Council being like our Senate, smaller, and the European Commission being like the administration, not the president himself, but his administration total. And then down at the bottom, you can see how many different seats different countries have. And here's where a lot of the impact is going to take place. The United Kingdom has 73 members of the European Parliament. There's only 2 countries that have more, and that's France with 74 and Germany with 96. So, as I mentioned earlier, some nations are smart enough to keep their own money. Actually, I have my number wrong. I thought it was higher than that. I thought it was 23 or 24 kept their currencies, but or didn't join the Eurozone. But it was 19. Since then, I think where I got that number from. Since then, some of these other countries that didn't join initially, the 9, some of them have joined the Eurozone. But if you're in the Eurozone The only currency you can use is the euro. So here's some things that led to the Brexit and what I consider to be a possible breakup of the European Union itself. And by the way, I'm going to get to here shortly what I believe are the economic implications for the United States and for your personal economy. But I thought it'd be good to have some background on the European Union and the Brexit itself. The fact that the Greek economy almost totally broke up, it's not widely known, but the fact is that the European Union was required to kick Greece out because it went below certain financial benchmarks that it had to meet, including particularly they had way too much debt. So they had to be expelled according to the governing documents of the EU, but they didn't want the EU to start breaking up. So they went in and bailed them out. They let them pay off their bonds at 50% and so on. Another sign was Iceland. It had been trying to get into the EU for years, and then it withdrew its application in 2015. I think, obviously, they just decided it wasn't such a good deal after all. And then Switzerland had again been trying to get in, and when they saw all the turmoil and Britain probably or possibly leaving, they withdrew their application just a week before the Brexit vote. After the Brexit vote, also, there was a lot of talk in France, a lot of strong sentiment for exiting the European Union before they had the last presidential election. So we're going to look at the political implications and the financial implications. And I don't know how much time we have, so if we're running short on time, just let me know, and I can wrap up next week.
We're still okay for now.
All right. Well, quickly, here are the political implications for the UK. They already formed a new government after the Brexit vote. The former Prime Minister and his government were just not happy, and so we got Theresa May's government. Scotland and Ireland voted to remain, and surprisingly, England and Wales voted to leave. You would have thought England would have been definitely one of the Remain countries. So it's possible that Scotland could secede from the UK, be unhappy enough, and they're the second largest country in the UK. And the two Irelands, as I described earlier, may reunite. So the British Empire has gone from a true empire. You know, the sun never set on the British Empire. They controlled just huge parts of the planet Earth, down to the British Commonwealth, where a lot of nations like Canada are loosely allied with them, but are not, you know, in other words, Canada still considers Queen Elizabeth II to be their queen, but they're really autonomous. And now we've gotten down to the four nations that form the UK, the United Kingdom, and it may get smaller yet. You know,
it's an interesting perspective. You know, it's also a very misunderstood and unknown and underestimated accomplishment of how a relatively tiny geographical country had literally had such a incredible hold on the rest of the world. You know, with so many colonies at its peak, it was you know, amazing. That, you know, because to put armies in these countries and actually take over these countries and colonize them was you know, an unbelievable accomplishment. I mean, it's sort of the greatest accomplishment of the last 500 years. The power they had over the world was monumental, but it was a lot of it was financial power.
Yes.
And that gradually dissipated over time. And of course, they had, when the pound was the reserve currency, it's sort of where the US is today. And you have to ask yourself, are the US dollars days numbered? Because it's sooner or later it's going to be superseded by another currency, possibly the Chinese yuan at some point. So the U.S. is at a point where it's stretched militarily all over the world. It's stretched financially in terms of probably having more debt than the rest of the world combined. At this point, it's a sort of at a critical point where. At the moment, it has the greatest economy still, but that's, I don't know if people have seen this, but the new economies of the 21st century, by 2030, China will probably have overtaken the US. By 2050, the picture looks amazingly different. You could have China, India, even Indonesia, and being larger than the US economy. By then, I'm not sure about Indonesia, but China and India definitely have the potential to be 1, 2, 3, kind of in that order. So
yes,
the change in order is dramatic, because actually a lot of the European countries that are still in the top 10 won't be there, even Germany.
Well, all good points, because England did have the strongest navy in the world. Their army was not that particularly strong, but the strength of England was the pound. That's how they conquer countries, with their financial power. If you ask the average person on the street today, where's the financial capital of the world, they would almost all say New York, right?
Right.
But it's London. And it has been for hundreds of years, and it will still be, even if they fragment, like I'm describing. So the British pound was the big dog. For 200 years, it was the world reserve currency, which is a concept, again, that a lot of people don't understand. They think that a currency just is somehow named the world reserve currency, maybe by the IMF or the World Bank or something like that, and so it's the official world reserve currency. Now it's a function of practicality. After Bretton Woods in 1944, most nations pegged their currency to the U.S. dollar. We formed the IMF, we formed the World Bank, but the U.S. was the biggest contributor to both of them, and therefore had a lot of control over them, just like we contribute most of the money, or over half the money, to the UN, but unfortunately don't have much control there. But the point is, it was then that the U.S. dollar became the world reserve currency, but it was more by consensus. But the ones who really voted are the central banks. A few decades ago, 90% of all the reserves on average in the central banks of the world were US dollars. Today we're down to 60%, and most of that 30% has been taken up with the euro. If we drop down below 50%, then someone else is eventually going to rise as the world reserve currency, and it's going to have a huge impact on our economy. So one of the things that has held us up is having that status and that position, but it's not for life. A number of different nations have been the dominant financial power over history.
Interesting. Very interesting.
Okay. 2015, Scotland held a referendum about leaving the UK. It failed narrowly, but it left the nation bitterly divided. And when the Brexit vote came up, 2/3 of the people of Scotland voted against the Brexit. So there's that possibility that it could leave the UK, just like Northern Ireland might, and join the EU. So you could end up with a fragmented UK, much smaller, and European Union nations dotted around amongst them. I still think that the Brexit is the best thing for them, but I'm not British, so my vote doesn't count. The Republic of Ireland, as I mentioned, is already a member state of the EU. Northern Ireland voted against the Brexit. So there's that possibility that we could see the two Irelands joining together. They've been fighting with each other for so long, but they could, this issue could weld them back together.
It's an interesting thing, not too many people are talking about that. And of course, having lived in Ireland for most of my life, or a good part of my life, the hostilities were pretty tough to deal with, and a very sad chapter as well. But there's a lot of passion on both sides, and but the thing that's kind of put the countries closer together is definitely being an improved economic situation, which was behind a lot of the trouble in the past, because when things were at their height, unemployment was very high in Ireland, and it was a really poor country. And so, but it's what a lot of people don't understand today is it's kind of like the Crimea and the situation with Russia. About 80 or 90% of the Crimeans are voting to stay with Russia in spite of this so-called annexation. Why are they doing that? Because their pensions and their economic stature has improved dramatically since they became part of Russia again. Remember, they used to be part of Russia in the past. That's what a lot of people don't realize. And
it wasn't just part of the USSR; they were actually part of Russia.
Exactly. And that's a huge deal in of itself, because all the Russians feel, that Khrushchev, who he was a Ukrainian anyway, and he gave Crimea back to the Ukraine, didn't go down too well with most Russians. And that's really, and behind the whole thing, and Putin, his power went up a lot, his power and prestige and popularity went through the roof over that annexation. Now, with Ireland, for the first time in history, perhaps, the North, and I'm talking about the Protestant North, might have an economic reason to actually unite with Ireland for the first time ever, in terms of, obviously the Catholic want to unite with the Republic, that's their stance, but the Protestants don't. They wanted to stay with the UK. However, when you've got a GDP per capita in Northern Ireland of probably $46,000 per person, something around that number, or maybe even less, because it's the UK, I think, is a bit higher. So you could have people in Northern Ireland earning 40,000 and people in the Republic earning 80,000. You don't have to be a rocket scientist to figure out which side they want to be on, and that's a powerful thing that could really change the dynamics of Ireland altogether, in a very well-meaning way. Where and look, the European Union has actually done more to diffuse the tensions in between the Republic and Northern Ireland than anything else, because of the economic. I mean, as a matter of fact, when you drove from Ireland from the Republic to, or put it this way, when you went to the Northern Ireland and you drove down to the south, you kind of knew you were in the Republic without even crossing the border, because you could tell that the economic conditions were not as good as the North. That was 30 years ago. Today, 30, 40 years ago, today it's the opposite. The Republic's, become a powerhouse, an economic powerhouse in its own right. And you probably notice the difference when you go to the North now, which is amazing.
It's interesting. You know, you can hear people so passionate about so many different issues, but this country has proved this time and again. When it comes down to the actual vote, people vote their wallets.
Yeah.
So, well, as far as the political implications for the EU, and by the way, thank you for that about Russia and Crimea. I did not know that. That's interesting. I love to learn. If this Brexit goes through, which I think it probably will, there's a strong possibility other nations may take the cue and follow. Like I said, when Brexit first passed, there was a real strong movement for a Frexit in France. Germany will take on more power within the EU.
There still is a pretty, you know, with all the trouble with Macron, they were actually saying when the last election took place that the next election will be won by the Frexits, and it's definitely heading that way. So, you know, they've got a few years to get their act together and maybe you know, solve these issues. But it is a threat to the union, and they're desperate to keep everything together. And in a way, by not giving in on the negotiations, they could be signing their own death warrant by not being more flexible. You know, I think if they can reach a meeting of the minds with the Brits in a way that satisfies most people, and like I say, maybe remaining in the union from a trade standpoint, it being kind of like some of these satellite countries like Norway, where they have all the benefits of the EU without the drawbacks, that's probably the best outcome.
Yeah, I've got a chart coming up here that shows the money that the various different EU countries are giving to the EU in fees and taxes and so on, and what they're getting back. And many of the countries, like Germany, are giving far more than they're getting, twice as much.
Mm-hmm.
So
that's why Ireland's so rich today, because it's been a huge beneficiary of the EU.
Okay, so we're going to see the EU redouble its efforts to tie the remaining nations to the union. They want to become a nation. They don't want to just become a union of nations. They want to become a nation. And so there's going to be more pressure on the nations that aren't part of the Eurozone to join it. And there's going to be a strong push for first a unified military, followed by an actual European Union military, and trying to get the various countries to give up their militaries and just have one big bloated military like we do. Okay, the political implications for the...
That's not a bad idea either, because, you know, given the number of wars that Europe has fought in the last 1,000 years, you know, this is probably the ultimate goal, so that people, you know, that there's never another Germany like World War I and World War II. I mean, who would have thought after World War I that there'd be an even worse war in World War II? Used to call World War I the Great War until they tried it again, you know.
And well, great about it, right?
Yeah.
And particularly France and Germany. I can't even count the number of times France and Germany have been involved in major and minor wars, besides World War I or World War II, but against each other. They've always had this really antagonistic relationship, and Europe in general has always been at war amongst themselves more than with other people. So yeah, that you're right. That's probably one of the biggest reasons why they pushed to have a union like this. Mm-hmm. But politically, there's going to be implications for everybody. There'll be new alliances that will form because the UK will be free to make its own trade deals and treaties. The UK will have much more influence over NATO than it currently does now, and correspondingly, the EU will have less. And this is a big one. The UK is a permanent member of the UN Security Council. That is very, very unlikely to change. Look what happened when the USSR broke up. Okay, Russia really was the USSR. All right, it basically just went around annexing countries and either shooting them or threatening them until they voluntarily joined the USSR. But when it all fell apart, Russia stayed a permanent member of the Security Council. So the EU is not even represented on the Security Council, much less a permanent member. The permanent members are 7 nations that have, veto power over any big stuff going on internationally. Okay, financial implications for the UK. They're going to say billions of dollars that they're spending in fees to the EU. I think that uncertainty of the economy will cause a temporary downturn, possibly even a mild recession. But in the end, this could be better for them financially. They'll be able to forge more favorable trade deals. For a time, we're going to see rates rise. Inflation's going to go up, mortgage and interest rates and so on. But it will still be the world financial center. And so I think they'll land on their feet financially quite well. What is your opinion on that, John?
No, I think you've got it right. I think that they might even become stronger being independent. They might even strengthen their financial. I mean, I know they've had some exodus of some companies, towards Frankfurt and actually to Dublin. But at the end of the day, all of these companies are going to have a presence in the UK, and it actually may make it stronger. It's sort of like this kind of maybe a temporary setback, but I actually believe London. Yeah, I think they're going to be stronger than ever because they'll have the freedom to be stronger and better through additional trading around the world.
Yeah, and just getting some of those regulations off their backs. I mean, the EU has issued such ridiculous regulations. I could do a whole hour on that. Crazy things that they require businesses to do that are just financially crushing. Okay, here's the chart I mentioned. Here's in blue the money that the various nations give to the EU, and in red what they get back. You can see that Germany is giving twice as much as it's getting. France is almost as bad as that. The UK is way more. It's one of the big reasons for the Brexit. It looks like to me it's maybe getting back 35% or so of what it gives. And then of course you've got other countries like Greece that are giving practically nothing and getting back a whole lot. So I once described the European Union as a sort of economic colonization of Europe by Germany and France, because it wasn't fashionable to go around and take armies and colonize people anymore. But if you get economic control over them, that's another form of colonization. So although it's not good for big countries like Germany and France to be giving so much more than they're getting, they also get an intangible, which is economic power over these poorer countries.
Look at Luxembourg. You know why Luxembourg is about the richest country in the world.
Wow.
Look at what it's getting out of being in Europe.
Yeah, and Malta looks like it doesn't give anything. yeah,
and Ireland. Well, Malta's become pretty rich recently. And Ireland is getting a little bit more but they used to get a lot more, I think, before. But Portugal, Spain, Greece, those countries are benefiting. Probably part of that Greece thing is the bailout deal that they've got. Look at Poland. I mean, Poland is, people don't realize this, Poland has become a pretty wealthy country in the last 5 or 10 years. It's one of the fastest growing countries in Europe today. In fact, you know that Ireland, when the European community started recovering, remember you had all that unemployment. Spain 25%, 28%, in sort of 14, 15, and then when we started to come out of this, Ireland's economy grew one quarter grew at about 25%. In one, you know, at the beginning of 2015, I believe. So it came out of this recession with a vengeance, and Poland, I think, was up there with them. But you know, a lot of Poland. There's a kind of a joke over in England. You know, that half of the economy is being supported by the 2 million Poles that ended up in the UK and send a lot of money back to Poland. You know. Same as the U.S. does to, you know, some of these remittances that go from the U.S. to the rest of the world are staggering, you know, even to China, with a lot of the Chinese in the U.S. today. And of course, it's a huge drain on the economy.
I can't resist this, but I have to tell a Polish joke, okay? Big
Careful.
tall blonde guy comes into a bar, and he's standing there, and fellow next to him says, "Hey, I got a great Polish joke," and he says, "I'm Polish," and the other guy says, "Okay, well, I'll tell it real slow then."
Yeah.
Not politically correct at all. Sorry about that, but a little humor never hurts. Okay, wrapping this up, financial implications for the EU itself. The UK, as you just saw from the chart, has been EU's biggest contributor. The EU is going to have to raise fees on the other nations, possibly giving them a reason to leave. You know, there's some nations, as I mentioned, that have already considered leaving the EU. This could start a domino effect. We could actually see the European Union break up. Right now, the EU is the world's largest trading bloc. It will still be large, but it's going to be a lot weaker without the UK. So what happens? I couldn't read my own slide there. What happens in Europe doesn't stay in Europe. This is a play off the Las Vegas thing. Europe doesn't just, it's not just an island unto itself. This is a picture of the United States during the Great Depression. It was called the United States Great Depression, but within 6 months, it had spread pretty much throughout the world. So we have a whole lot of interlocking of economies worldwide. So it's going to affect us. It's going to have effects on the U.S., some good, some bad. In my opinion, initially it's going to be fairly small. We only do 5.5% of our trade with the UK. But the economic turmoil that could result, especially if we have a no-deal Brexit, could have a spillover effect on the United States. I think it'll have a negative price effect on stock prices because, as everybody knows, stock market does not like uncertainty. And it will probably have a positive effect on gold. Financial implications for you. Well, your retirement plans, annuities, and so on will lose value if I'm right and the stock market goes down. Your gold and silver will rise. But this is something everybody needs to do anyway, and very few people even think about this. But when you decide to do business with a bank or an insurance company, check their ratings very carefully. If we have any type of financial reversal in the United States, there will be banks and insurance companies going out of business. And people say, well, insurance companies can't fail. Well, why do people think that? I mean, look at AIG. AIG went bankrupt. If the U.S. government hadn't bailed them out, the largest insurance company, not in the United States, but in the world, would have failed. So please don't think that insurance companies can't fail. And please don't think that banks can't fail. There's banks fail in the United States every year. The aftermath. The day after the Brexit, U.S. stock markets dropped 4% and gold rose 5%. So that's part of my reasoning on the slide before, why I said what I did, that I think that once the Brexit's done, that it will be negative on stocks and positive on gold. I could be wrong. Once the uncertainty is over and the Brexit's done, maybe it won't affect the stock market, but this is the way I would bet. All right. So the 2 years are almost up. Under the Treaty of Lisbon, back in 2009, under those rules, Article 50 was declared by Great Britain. So from that point, it has 2 years to negotiate its exit from the EU. Well, those 2 years are up March 29th, just a little over 2 months from now. The presidents of the major European Union bodies first encouraged the UK to exit more quickly than that. Go ahead and get it done in a year if you can. But now it seems like they're dragging their feet, trying to force the UK to stay. Nobody knows how that's going to end up. But it's not going to be pretty. All the remaining nations in the EU have to agree to the UK's terms of exit, and it doesn't look like that's going to work. Leaders of these other nations have been adamant about not agreeing to easy exit terms. When I talk about exit terms, there's a lot of stuff that goes on. There's trade treaties, there's various different agreements and so on, financial agreements that have to be taken care of. And excuse me just 1 second. We have a problem, Houston.
Uh-oh, we can still hear you.
Okay, yeah, it's just my screen sharing got messed up for a second there. Okay. So by trying to make it difficult financially on the UK, having them pay more money than the UK wants to and so on to get out of this compact, they're doing it not to just keep Britain in. I don't think for a long time they thought there was any possibility of that. Now there is a possibility. But also they want to discourage other exits by other nations. 4 ways that the Brexit could hurt the U.S. Some people here are fearful that the EU may be falling apart. I think it's possible, and I'm not fearful about it. I think it would be a good thing. I never liked the European Union. Volatility in the market could slow down U.S. growth. Brexit will probably trigger a stronger dollar, which of course hurts U.S. trade, and it's going to force the Fed to change its ways, I believe. So there's the puzzle piece.
In which direction do you think it will cause the U.S. Fed to change?
I think that they'll do less rate hikes.
I think out of the box idea, there's some strange things going on with the alliances in the UK regarding this. Labour is getting stronger, the Labour government and the opposition at the moment. They're for Remain, the Labour. You got Tony Blair came to light in recent weeks, very pro Remain.
Right.
Got powerful people like Richard Branson and most of the billionaires in England want to Remain. So the money wants to remain. The City of London wants to remain. Believe it or not, Theresa May was a Remainer before she became TM. She's kind of, got a dual kind of interest here. Which is probably why they've been dragging their feet to kind of get to this point where, according to the polls, I haven't looked at them lately, but I just did see one where there's supposedly 57% now want to remain. It's an overwhelming majority compared to where they were with the Brexit. So, stranger things have happened. And, the dynamics are kind of, accelerating here in this next couple of months. And Europe may offer a lot of concessions at the end. We play to their own game, from non-negotiation standpoint to giving up on a lot of things to keep Britain, in some way, shape or form, part of the deal. Because look, this isn't a kind of a game. This is the future of the world at stake here. And as I've brought up on this show a number of times, people with European passports can live and work in any country without any kind of, scrutiny or anything like that. You don't have to have work permits. You have a work permit to live and work in the UK. You have freedom of movement, freedom of travel, freedom of living wherever you want, and a lot of people like that. There's an awful lot of French people living in England. There's an awful lot of Europeans altogether who are living in England today who don't want to change. They don't want to get booted out. So there's all kinds of embedded, remain favorable to remaining in the larger scheme of things. So I think at the end of the day, even the Brexiters would probably go along with staying in the customs union and in the trading union and being on the not being under the sovereignty burden of Europe.
Yeah, I agree. I think that the European Union has messed up these negotiations, because if they'd agreed to something along those lines, the majority of people would go with it. And I think that they've been trying to sabotage it. And you just gave me an interesting idea. You said that she was originally, Theresa May was originally Remain. What if she's secretly sabotaging the whole effort?
Exactly.
What if she didn't make the best deal she could have with the EU?
Yeah, and exactly, and look, then you got, I tell you this, if she loses power and she's taken out in a coup by Boris Johnson, I think you can guarantee we're going to leave the European Union, because Boris Johnson's a pretty powerful guy, and he's a diehard Brexiter, and I don't think he's going to relent. So that's the kind of twist, that could happen at any moment. Because I think he's getting, he's a contender for the #1 spot. He might not be the contender, but he's one of 2 or 3, and he seems to be rising. He's a pretty smart guy, and he's a Trump ally. He's a Trump. Some people think he's similar to Trump in a lot of ways.
I think they're actually brothers who are separate.
Right. I think it'd be very good for the UK-US relationship, because they would get on extremely well, and possibly do a lot of good things together. So there's that's a positive in of itself. But it's sort of a struggle now. It's kind of a power struggle that's probably going to determine the outcome of this whole thing.
Well, all right. Almost at the end here. If the European Union breaks up, how's it going to affect the United States? Well, the EU is a major trade partner. I mentioned we only do 5.5% of our trade with the UK. So it would cause global uncertainty and renegotiation of trade deals. Those can be good or bad.
I think that's overrated. All this stuff is kind of overrated. I mean, to be fair to Trump, he kind of, the South Korea trade deal was done pretty quickly. I think, if Boris Johnson was the prime minister, you'd see a trade deal done in a matter of months. You know, something pretty rapid. So, you know, and look, people aren't just going to stop trading. It's just not going to happen. Trading's going to go on like it has since the beginning of time, and not much is going to get in the way of it, whatever happens. So, and you know, I think the conditions of a Brexit anyway, the customs deal is going to remain in force for a couple of years. So it's going to be a measured climb down, if there is going to be a climb down from that. So I think there's a lot of fuss, you know, an awful lot of fuss about this. And, you know, the pound may be the ultimate winner either way, in the sense that once the certainty of knowing what's going to happen actually happens, the pound may actually start going higher, and probably eventually get back to its Brexit, pre-Brexit levels.
Good point. I probably should have said could cause global uncertainty instead of would. Definitely there will have to be some renegotiation because there's going to be different players, but it doesn't necessarily mean chaos. France, Italy, and the Netherlands have considered leaving. That could happen. Sweden, Denmark, and Hungary are also possibles. I think, you know, what you were saying about the being able to move back and forth and stay in other countries, so on, that's probably more of a consideration for people who live on the continent because of the geography, Great Britain being separated and so on. It's not as big a deal there, but it's certainly going to be an issue. I know a lot of people in England that have retired to Spain. You know, they're expats over there because it's real cheap because the Spanish economy is so down. Merkel was quoted as saying, we need to acknowledge that we're faced with lots of doubts about the direction of Europe, not just in the UK, but in other countries as well. So she's acknowledging that other countries may possibly exit. No question that there's going to be volatility in some areas. Consumers create the majority of the economic activity in the US. So if markets are down, consumers stop spending. Brexit is already causing volatility in global stocks. Actually, since the vote, that has slowed down. There was a lot more volatility originally. I first wrote this right after the Brexit vote. Whether or not the U.S. economy is affected significantly will be whether equities tumble enough to have a major impact on business and consumer confidence. This is a quote from Jim O'Sullivan, the chief U.S. economist at, can't remember the firm. So
he was with Goldman Sachs before. He's not with them anymore, but I think he's some other outfit now. Maybe his own company. Yeah.
All right, thank you. So ways that it might strengthen the U.S. dollar. The British pound dropped to its lowest level right after the vote against the U.S. dollar in 41 years. Strong dollar hurts U.S. trade, of course. So corporate America, before the exit, had been in an earnings recession. Of course, now since Trump, that's all turned around. But the Brexit itself could cause some problems in that area. I don't know. I'm just throwing out possibilities. There's a picture of all the ministers there of the
they look very important
economic ministers. Yeah, you know, everyone's wearing a suit worth at least $2,000.
Yeah.
Speaking of banks, the interesting statistic came out the last few days. The U.S. banks, I think this last quarter, topped 100 billion for the first time. It might be for the year, I'm not sure, but it's a quantum leap above anything they've ever done before, like about 40% higher than previous cumulative bank profits, which is really amazing.
Boy. Okay, again, these are just possibilities. Negative interest rates, which they call NERP, and zero interest rates, which is called ZERP. This is already happening in some countries, and whether you just put your money in the bank and don't get anything for it, or whether you have to pay the bank to hold your money, and that could happen in the United States. We could see a global debt crisis. I mean, that's been looming regardless of Brexit. If things get really weird, we could see gold up $4,000 or $5,000. I certainly wouldn't complain about that because I've got 70% of my net worth in gold. We could see severe hyperinflation in various different parts of the earth, and stock market and real estate market crashes. So I'm not going to go through this. This is just some predictions people like Carl Icahn made. I want to wrap this up. But here's some interesting articles. You can find them on my website, conservativetruth.org. One of them, who cares if Greece leaves the Eurozone? It talks a lot about the dynamics of the poorer countries being supported by the richer countries. So even if countries in Europe were not socialist themselves, the European Union is a socialist concept. Great Britain's attempted escape from the European Union. This was written before the Brexit, but it has some good historical information in there. And the British Revolution and the end of the EU. Now, unless you're writing these down, you probably won't remember them. So feel free to email me, Dr. Tom Barrett at Comcast.net, just Dr. no period, Dr. Tom Barrett at Comcast.net, and I can send you the titles, and you can find them on Conservative Truth if you're interested in the EU and its past and its future. And let me just leave you with a little bit of humor. Brexit was the name of the British exit. So if Italy leaves, we could call it the Italeave. If the Czech Republic leaves, it could be called the Checkout. Austria would be Austria la Vista. If Finland leaves, we'll call it Finnish. If Slovakia leaves, it's the Slovak out. And of course, Portugal will be Departugal. So
that's good. I like that.
I like a little humor.
Yeah, always.
Okay, well, I think my time's up.
Thank you very much for that. That was quite informative. I was just sitting here getting educated.
And thank you, John, for some great contributions to this.
No, that was a great presentation. Thanks very much indeed. Very illuminating, actually. I'm sure for a lot of people who really don't know much about the EU, it was a great session. Thanks very much.
Yes,
well, thank you.
Thank you very much. Thank you, John, and thank you, Tom. And I'll talk with you both later.
Okay. God bless.
All right.
Thanks.
Have a great afternoon. All right, guys. We ran a little over today, but that happens. Sometimes we end early, so we always try to balance that out for you. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.